Hello, everybody. Hello, everybody. Steve Griffiths here. Could you let me know whether you can hear me okay and whether you can see the slide stroke chart okay, just so we do a quick audio check at the start of the webinar. So while you're doing that, I'll just have a look at the risk disclaimer and just remind you that all examples in this training room should be considered as hypothetical. No trades are actually taken. They're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly, accept that losses can and will and do unfold. Doesn't matter what trading approach you do, there always will be losing trades. Right, let's start today's webinar by going back to having a look at the Euro US dollar short here we were looking at last week. It's always good to then follow these up and just see how it's progressing. So I just want to go over the setup again and just remind you how we use MTPredictor. Because remember, MTPredictor is not a black box system. We don't blindly just look at the chart and see the setups here, including our history triangles, perhaps take them in the direction of our MTP trend color. We don't do that. The reason we don't do that is because we understand that markets basically go in cycles. In other words, half the time, markets are basically random. You can't really discern what the trend direction is. You can't see any clear patterns. They're basically random. In other words, you can't get any kind of meaningful analysis. And I think this is a point that many amateur traders and particularly system traders never really fully understand, is that half the time markets just can't be predicted. But the good thing is about half the time you can. So how do we do this? Well, we go to a higher time frame chart, because on this one, the Euro US dollar, it's an hourly chart. So if we get to a higher time frame, which is normally between 3 and 5 time frames higher, the next logical time frame up, we then look for our support and resistance zone. So I just want to go back in time a bit here, just exactly as I did last week, and see whether the last important pivot high was. So you can see here, there's fairly obviously a major pivot high here. So we right mouse click, we do a decision point. That gives us an area of resistance, but more importantly, that's on the chart in advance. That's before the market even gets there. So if we turn trading mode off, we can see what the market did. The market went up into that level. It then reversed that level. In other words, the market was doing what we anticipate. In other words, the picture's becoming clear. So then we come down to our time frame we're looking to trade off, which is the hourly chart. Let's go back to as the setup looked at the time here. So as I said last week, here the market is making a reversal of our higher time frame resistance. Remember I said that also there would have been a reversal there on that DP sell setup, so that would have actually been a losing trade. Losses can and will and do unfold. But the one I'm looking at is this one, because here the market came down. Our large view trend was down off this resistance. The market then made an ABC correction up. Our MTP trend was red. Everything was then becoming clear at this point in time. We then right mouse click, we do our analysis. And I think last week, the market was in and around here somewhere, wasn't it? And you can see what the market's done since. It's gone down, wobbled around at our DP level here. That was the DP off that low. It's then retraced back up again a little bit against you. And now it's starting to climb back down again. And I know I don't talk about psychology all the time, but I think quite a few of you like it when I talk about psychology. And this time here is when the psychological parts start to sort of play on your mind, because here you have a good analysis. Everything looks to be clear. You're sitting on about, well, 6-hour profit, 6.5-hour profit is very, very nice. Your target's down here. We still haven't reached this at a potential 10-hour profit, so you haven't quite got there, but the market starts to retrace back. You can see your 6-hour profit suddenly go back to 4, 3-hour profit here. So nearly half your profit would have been eroded away as the market retraced back. This psychologically is really, really hard to sit through. Because this is what I've found over the years. Most of the people who come to MTPredictor are people who are either losing money or struggling. And let's face it, most amateur traders tend to struggle. 97% typically tend to lose all their money in the first 3 months of trading. I think that's what the statistics is. So 97% virtually, in other words, virtually every amateur trader tends to fail in this business. So the first thing we try to get you to do is try to use position sizing. Remember here, we use our position sizing to keep your losses small. We try to then get you to trade less, so you only trade when the pattern's clear, and when the losses come through, the loss is small. But that's only the first part of the question, or the first part of the answer, we'll say, to the question on how to become a successful trader. It's good to trade less, only trade when the picture's clear. It's then good to lose less when you lose. But the next equation, and this I think is I think one of the harder parts, is to let your trades run. So when you have your profits are large in relation to your losses, not small, because if you only have small profits and small losses, it's very hard to move ahead. So I don't know what you guys think about when you're in a trade. Do you all find it's really psychologically hard to stick with it when it's retracing back against you like this? So I thought this was a good example to do to show you what happens in real life. Now, I don't know whether it's going to reach that target there. I have no idea, because this is what the market is live at the moment. But all I know is over time, it's better if you get trades where the profits are large and keep the losses small. If we go out to the higher time frame chart, again, the 4-hourly chart, where's the next logical support zone? Well, if we go off the last swing into that high, there's the high. This is the last swing into the high. Remember the webinar I did on DPs. The first place, or the most important DP to use, is off the last swing into the high or low. So that's the last swing. This would be the pivot to low. So this, sorry, to use off that low. So this would be your next major support zone. It hasn't got there. If we come down to our hourly chart, where's that higher time frame support zone? Smack bang in our typical wave 3 WPT target on our 1-hourly chart. So can you see how everything again is coming together? It's coming together to give you a clear picture. This is why it's important to not have your stop too close, but allow you to have trades run your trades. Yeah, Sylvian says it's his biggest issue. The worst thing is you have to then work on psychology on your every single trade. It really is quite difficult. On a personal point here, just want to go back for me, is I was looking at, where was it? That's right, some trades here on the NQ, which it was a losing trade. I know this was against the blue MTP trend, but actually that was a higher time frame resistance. So I made a losing trade there. The next day, which was Friday, I took my eye off the ball, was distracted, and look what happened. So I missed this. So this is where the YM on Friday on the 3-minute chart went up into its 15-minute DP. It then made a VS sell. And you know what the webinar was last week? It was all about the VS setup, wasn't it? So last Tuesday, I went over in great detail about the VS setup. And here I was myself yesterday, distracted, missing that particular sell. And look what that did. Bang, down into there. Can you see that? For a 10-hour profit. Came off the very bar of the high of the day on Friday, went straight the way down into a 10-hour profit. Psychologically, this is really, really hard. You know, what we do here, as far as the technicals, is relatively straightforward, I think. Once you've got the basic idea, it's relatively straightforward. But, you know, even still after 33 years doing this, you know, I struggle with psychology as well. It's because we're all human beings. And I think all you guys there are in the webinar today will agree with this, is sometimes it is so hard to basically do the right thing all the time. And it's only human that we all struggle with this. But anyway, on Friday, that was nice to see, wasn't it? So did any of you catch any of you catch that trade? The 3-minute sell on the YM on Friday, because that was an absolutely corker of a trade. If you missed that one on the NQ, I know I'm sidetracking here, but on the NQ, there was also a lovely trade there on Friday as well. Didn't quite reach the the target down there, but on the close on Friday, it was 11-hour profit. So Friday was an awfully good day for MTPredictor. It really was. It was a very, very good day for MTPredictor. Yeah, Chris says quite often people want to move their stops too quickly, and that's usually not the best thing to do. You're absolutely dead right, Chris. This is exactly what I was saying here. So anyway, back to this particular conundrum here. So let's follow this over the next week or so to see how this unfolds as hopefully the trade carries on down to this level. Now, obviously, sometimes you'll have then a 6-hour profit and it will go up and probably stop you out at break even. Sometimes that will happen. And again, psychologically, that's awfully hard to do as well. But the point I'm trying to make is it's better over the long run to try and let your trades run. And this is why you have to be in trades for a long time, and it takes time for the trades to unfold. So hopefully that's a good tip for you. Mazir, I can see you're in the webinar today. There was a particular cross rate that you wanted me to look at from last week. Could you let me know what that cross rate was? It was I think a DP question on the higher time frame and lower time frame on a particular cross rate, but it wasn't. It was one to do with the British pound, wasn't it? I can't remember. Was it the Australian dollar, GBP? I can't remember what it was. So Mazir, could you just type into the question and answer what particular time frame or what cross rate, Forex cross rate that was you wanted me to look at again, please, and I'll take a look at that. Which one was it? Just type in which Forex cross rate it was, please. I'm just waiting for Mazir to come back on this very quickly because I want to go on and have a look at DPs again, about where to actually place DPs, because that seems to fit in with Mazir's question and also seems to fit in nicely with what we're talking about here, where the picture becomes clear when we have the DPs on the chart from the higher time frame. So while Mazir lets me know what Forex cross rate that is that he wants me to look at, I'll go and have a look at some other charts. Right, I want to now have a look at which pivots to use for your DPs, because I think this is one of the fundamentally most important things to do, because the reversal of the DP then defines whether the picture is clear. So I want to go over this, and I'll keep going over it again and again and again. So I want to just now have a look at this is a 24-hour chart of the USE minis. I'll just take that one off. I use a 24-hour chart here just because we've got some good examples on this. It's the same for any markets, any time frame combinations. But which DPs or which pivots do we use to start with? So I'm just going to go back in time a bit, up to here somewhere, and have a look at this chart. Right, we have our MTP trend here, but like most indicators, it just works off all the swings on the chart, because indicators, they can't pick and choose. They just work off 100% of anything. So of course, as you know, half the time markets are unclear. Half the time we want to try and see whether the picture's clear, and for that we project the DPs out. The first pivot we use, or the first swing we use to take a DP, is the last swing into the high or low. So if you look at this chart here as a human being, we can see that's the high. This line up here is the last swing into that high. Can you all see that? That is the last swing into that high. So this pivot here that I'm circling would be the first place to go right mouse click, decision point, to give you an area of potential support. The last swing into a high or low. If I turn training mode off, what has the ES done? Well, very, very nicely. It's declined really nicely. And where did it make its low? Bang, right at that level. Now, do you see how early we had that level on our chart? We had our level on that chart, right back here. We had that level of an area of potential support. This is how powerful these DPs are. So once that's come in, then you know the shorter time frame trend is up. Where would it be going up to? Well, this is the last swing into that low. Perhaps I'll just take training mode off again to back there. Do you see that? This is the last swing into that low. There's the low. There's the last swing. You right mouse click off there. That would be an area of potential resistance. If I turn trading mode off, look what the ES did. Bang, straight back up into that level where it reversed. So if you're trading off a 3-minute chart, this should be a good swing to then to know that you're in this large degree trend direction, and that's where our MTP trend color comes in as well. But this is what I want to show, the swings to use. In other words, which swings to use. The last swing into the high or low is the first place to do this. Now, does this work perfectly all the time? Well, of course it doesn't. And this is why markets are basically are random half the time, because if I go back in time frame, if I go back to here somewhere, you'll say to me, right, where's the last pivot high? Well, here it's quite difficult because there's no sort of last swing. You know, if anything, there's the low, this is the last swing. Do you see that? That there is the last swing into that low. If I just clear everything off there first, that's the last swing into the low. You should right mouse click, do decision point. That would be an area of potential resistance. Now the market's gone beyond that. So if the market's gone beyond that, where do we then look for? Well, we then go back to the last major swing high or low. So once we've breached the DP from the last swing into the high or low, we go back to the last major swing high or low. So from this chart, you can see obviously it's there, isn't it? So that's the last swing into the low. You go back to the last major swing pivot high. Well, it's there, isn't it? So we right mouse click, we do decision point. That will give you an area of potential resistance. Ideally, we're looking for the market to reverse at that level. If I turn trading mode off, guess what? It didn't quite do it. Here it went into it and went slightly beyond it. So this is what happens as well sometimes. I mean, if the market's reversed at these DPs every single time, we'd all be billionaires. But this is, again, the hard part of trading is that nothing works 100% because you go into that random phase. So here the market went through this DP. It went into the next DP, and then went slightly beyond it. So here, the market was not in a clear position. And this is what we're looking for. We're looking to see whether the market makes a reversal at our DP. If it goes beyond it, then goes, you know, sort of mucks around, then we deem that the market is not clear, and then we should not be making a trading decision on that. Compare that with the YM, and here suddenly, you know, we get a lot clearer picture. In other words, that was fairly obviously the last sort of swing pivot high as before the market started to rally up. So the DP off here then caught that high perfectly. Do you see how that now reversed out the high nicely? Where would be the support, next support as this started to come down? Well, here's the last swing. This is the last swing. So you'd look off this pivot here, right mouse click, DP. It then goes beyond it. Where would you then look? Next look? Well, here fairly obviously is the next major swing pivot, isn't it? You can see that. That's the next major pivot. You try there. Here, the market then came down to that level and reversed absolutely nicely. So we don't need that one anymore. So sometimes it works absolutely perfectly. Sometimes it doesn't. It doesn't, sorry. And that's what we're looking for. We're looking for when the market makes nice reversals at our DP levels to then deem the picture's clear. If we are in a situation like we were in the ES, where the market doesn't make a nice reversal, it just means the picture's not clear, and we look to another market or time frame, or we wait until the picture's clear. And it really is as simple as that. I think people who don't sort of spend the time to understand this get very frustrated, and they're saying, oh, well, why doesn't this work? Well, they don't seem to understand that nothing works 100% of the time. Nothing works every single time. If it did, then the markets wouldn't exist. Things only work part of the time. In other words, part of the time it's random, part of the time it's clear. So when it's random or not working, then we ignore it. But when it is clear and making reversals at our levels, then we make use of it, and we then do trades off the back of it. And obviously, as we said before, you will then get losing trades, but hopefully over time, the losses are small and the profits are large. Right, Mazir's told me about it's the GBP AUD. I thought it was. So if I go to have a look at that. So I think here you're looking at 240-minute chart to start with. So let's have a look at that. Try to think where your setup was. It was on an hourly chart, wasn't it? A 1 hourly chart. I think there was an example you're looking at, wasn't it? I think you're looking at this TS4 buy setup, weren't you? So if we go now back to the hourly chart, the 4 hourly chart. What is the position of the large degree trend? Well, here's the last swing into the high. You'd right mouse click, do a DP. It's now gone through that level here. So what's the large degree trend now? Well, it's not quite so clear. It's dipped down below it, gone back above it. Are there any other pivots further back? Well, the next major pivot is right back here. Mazir says off the daily DP. Right, okay, I'll go to a daily chart. So he's gone up to a daily time frame. Right, okay, I'll see what Mazir's done now. What he said is now, this is the last swing into the high. Yes, Mazir, that's correct. That's the last swing into the high. That's the last pivot low. We right mouse click, we do decision point. It then looks to be making support in and around this level here. Is that what you're saying? So support in and around that level there. So when you've gone down to the 1 hourly chart, you've looked at this and said, yes, there was support in around here. In around here, but it wasn't absolutely perfect, was it? It was all a bit choppy. And the trouble is that you've gone, the time frames are quite far apart. Is because an hourly chart is quite small relative to the higher time frame of a daily chart. So if you're trading off a daily chart, your next time frame down would probably be the 240-minute. So you're pushing the boundaries here. So if you are, because what Mazir was looking at was saying, well, if that's support, largely trend was up. Therefore, you'd like to have a look at this TS4 buy setup. Our MTP trend was blue, and you look at this and saying, was this a good trade to take? What I'd do in a circumstance like this, Mazir, is because your time frames are quite far apart, they're not sort of what I call the next time frame up and the next time frame down, and the reversal wasn't absolutely clear, it was quite choppy. If you wanted to go for a trade setup like this, then deem that it was a little bit more risky than normal, particularly as this was quite a long swing up here, and this was only a very small ABC correction, wasn't it? I mean, this correction here only lasted from there to there, only lasted a few bars, but that was really, really small in time relative to this whole move all the way up. So the pattern didn't look very symmetrical, it didn't look like it's a nice pattern. So if you're doing that and the pattern doesn't look really nice, in other words, everything doesn't look very symmetrical, then if you still want to take the trade, that's the time to bring your stop to break even once you've passed the 100% initial risk level. So Mazir, does that make sense? In other words, you're trying to push your analysis a bit further beyond what it looks absolutely perfect. In other words, a really nice trade setup. When you push the boundaries a bit too much, that's the time to then be more aggressive with your stop loss. Yeah, that's it. So Mazir, you get it absolutely perfect. So the TS4 came from a smaller degree. Yeah, exactly. It's quite a lot smaller. So if that's the case, then be more aggressive with your stop loss. In this case, get it to break even quicker, and that would have been then a break even trade. So that wouldn't have been a losing trade. So that's a good question on that, and that's quite why we do this teaching here, because every single one of you is different. Every single one of you has a different level of experience. Every single one of you has a different risk aversion, or every single one of you is has a different aggression, if that's right. In other words, some of you want to take trades that are less ideal. In other words, be more aggressive with your trades. Others of you want to be more conservative. You'll trade far less, but only trade when the picture's actually picture perfect and perfectly clear. So all I want you to get you to know is that if you're being more aggressive, like in this particular example, then also be more aggressive with your stop loss. get it to break even quicker. So Mazir, hopefully that helps. And that was a good example to look at. So thank you for bringing that to the table. Right. Are there any questions on what swings to use for our DPs? Because again, this is the most vital thing to do. And as you can see, if you do this correctly, then the DPs do work really, really nicely. In other words, they do give you great setups. So again, just to recap, the first swing to use is the last swing off the last high or low. So if we go back to here on this YM chart, as the market is rallying up from here, where would our first DP be? Well, here's the last swing. That's the last swing into that low. So we'd right mouse click, do DP. That would be an area of potential resistance. Let's see what the market's done. Well, in this case, it went straight the way up. It went up into that level there and has now started to come back down. So it's now provided a bit of resistance at that level. So after this, the large degree trend would deem to be down. It's now made a double top at that. So, you know, that resistance is still holding. But what I wanted to imagine was if the market now carried on through this, then the next pivot to use is the next sort of logical swing high or low. So after this pivot here, we then go back to this major swing pivot here. You see, as a human being, it's really easy to see, isn't it? That's really obviously the last major swing high or low. So that would be your next resistance area if this DP is breached. Chris has asked a very good question. He's saying, how many losing trades should you have before stopping and moving on to the next one? Again, it's up to you really as what's on your own trading plan. It really is. Depends how aggressive you are. If you're a more aggressive trader, you'd probably be willing to take more losing trades. If you're more conservative, you'd probably want to stop and wait till the picture becomes clearer. So that's not something that is a hard and fast rule on that. Sometimes it's quite difficult for me to do specific teachings because every single one of you is different, but I hope you appreciate that, because I don't know about you, but I personally don't like being squeezed into a box where I'm told exactly what to do. I like to be given, you know, I like to make my own trade my own trade plan, my own rules based on the sort of the large degree parameters that fit in with the system you're using. In other words, every single one of you is individual, so I want to treat you as individuals. Right, are there any questions on that so far? Because if you can get the idea of putting these DPs out there in advance, then that will give you a really good idea of where to anticipate future reversals. And if you can anticipate the future reversals well on the higher time frame chart, then you can get the large degree trend on the shorter time frame, and that can then get you in the right direction. And I think that's one of the biggest challenges, or the biggest first step you have to getting in the right direction. Yeah, Chris says occasionally you'll get DPs that break through support and resistance, which he calls them fake breakouts. So that's why you can't rely on one indicator. That's exactly right, Chris. That's why what we're saying is that markets are random half the time. In other words, there'll be times when these work absolutely perfectly, and there'll be times when they don't. So the trick is only working with them when the market is doing what you anticipate. If the market is not reversing at levels that you anticipate, then don't work with that market. In other words, only work when the picture's clear. And it becomes clear enough of the time to be able to then gauge large degree trend direction. So if I go back to that YM trade there from Friday, if I go out to the 15-minute chart, this is why I was kicking myself here. There's my analysis on the 15-minute chart. I went back to there before the day even opened. I said, right, where's the DP resistance going to be? Well, that's the last major pivot high. So threw out a DP from there. So that's the area where potential resistance is going to be. Watch when the 3-minute chart gets up to that level for any sell setups. What happened? There's the there's the DP high. If we go down to the 3-minute chart, that's exactly what happened. Excuse me. The market opened just shy of it, came down, went back up again, right into that level that was on the chart in advance to give a VS sell setup. Particularly as that VS sell setup, where I was going through last week exactly what to do for the VS setup and exactly what it was like. So, you know, that setup should be fresh in everyone's minds. Came down there for 10-hour profit. So that's what we're looking to do. We're looking to try and only take trades when the market is doing what we anticipate. And what do I mean by that is when it's making reversals at our higher time frame support and resistance levels. And as you can see, that'd be a lovely trade to take, that would. And of course, yesterday, nothing really happened at all. It was a really hard day where the market wasn't making any real trend direction based in and around reversals off our higher time frame DPs. Because now if we see where the market is on this YM chart, if we go out to the 15-minute chart, where would our levels be? Well, this is the last swing into that low, isn't it? There's the low. This is the last swing into the low. So right mouse click, DP. That would be an area of potential resistance for today, or initially, until we see if the market gets up to the level. If it gets to that level, not that it will, if, to see what the market does there. DP off that level would be an area of potential support. So instantly you have areas of where the market, if it gets into these levels, the areas of interest to see what the market's doing at, on the shorter time frame. You see at the moment, it's not really doing anything. You know, it's sat there in the middle there at the moment. At the moment, there's nothing to do. So does that make sense and give you a good idea of how to basically approach this on a daily basis, how to approach placing your DPs on the chart, whether you're using slightly longer Forex charts, perhaps if you're using daily stocks, if you're following daily stocks, you'd be using DPs on the weekly time frame. If you're trading, say, Forex on, say, an hourly chart, you'd go out to the 4-hourly chart. Azir said to have a look at the Euro Canadian dollar. Let's have a look at the Euro Canadian dollar. Here's the Euro Canadian dollar on a 60-minute chart. We viewed off this. Can't see where. Oh, is that? Can't see where that chart. Oh, the Euro Canadian dollar. Sorry, Euro Canadian dollar. So I'm looking at the US dollar. Sorry. Let's have a look at the Euro Canadian dollar on a 1-hourly chart. Right. So here you're looking at that VS sell setup. So if we go out to the 4-hourly chart, what is the resistance area? Well, there's the last pivot high, isn't it? So we right mouse click, do DP. That gave you an area of resistance. I'm guessing that's exactly what you did. You then went down to the shorter time frame chart, which is the hourly chart. You looked at that and said there was a VS sell at your high time frame resistance. Your MTP trend was black, in other words, in the area or at the time of making a reversal. You then said, right, okay, thank you very much. That is the trade setup you want to take. Is that what you did? Yep, that looks an absolutely perfect setup. Is it going to reach the target? I have no idea. I don't know what the future brings. No one knows. All I know is if it does get down to there, it will be a potential 6-hour profit. If it stops you out, it'll be a -1-hour loss. There's nothing more as a trader you can do at that. The only thing you can do as a trader is control when you come into the setups. So I think, Mazir, you've done that absolutely perfectly. I mean, that's an absolute, that is a picture perfect example of putting the higher time frame resistance on, going down to the shorter time frame chart. There's your setup, take your position, and in you go. So, you know, that's absolutely perfect. So everyone else, that's a good, perfect example to take from Mazir of a good looking trade setup. But that does not mean it's going to make a big profit. That does not mean it's going to not get stopped out. It just means that it's a good trade setup. So Mazir, let's have a look at that one when we come back, perhaps next week, and see how that one actually unfolds. That'd be a good one to follow. So thank you very much for that. Yeah, Mazir's exactly right. He says we're at minor support. Mazir, I tell you what, you could almost sit in my chair here. He's exactly right. The first level of minor support is where the DP off the last swing. So what he's looking at is that's the last swing into the high. He's taken the DP off this level here, and he said we're now at DP support or minor DP support. So he would not be at all surprised if you get a little bit of a rally back up at this level. So exactly right. You just know that there could be potentially be a minor rally at this level. Sylvian's saying about whether you should use the 100% initial risk level for your break even. Again, it depends how aggressive you are. If you're a confident trader and you're quite happy having your 1 hour risk sitting there, it's probably better to leave it above the stop trigger. If you're a little bit more conservative and a bit more nervous, well then yes, now you've passed the 100% initial risk level, then bring it to break even. So that one is up to you. It really is. Yes, Chris, sometimes you get VS setups a bit later in the day. If you do, well, then you don't have time for the market to unfold. If that's the case, then they're probably not great trades to take as you don't have the time for the market to go in your direction. Right, are there any last last questions in the last few minutes of the webinar? So I think today's been a very good webinar today, so I've thoroughly enjoyed it. I've covered the topics I wanted to on looking at which swings to use for the DPs. We've had some very good examples from you guys on some trades to look at, particularly ones that I don't follow myself, so we can have a look at how we use the higher time frame DPs to then gauge whether the picture's clear to then take trade setups on the shorter time frame. So that's some good examples there. So hopefully you've all enjoyed today's webinar. Chris says, anything happening on the ES? Well, we've had a look at the YM, haven't we? So here we're put out our levels for today, or for the initial part of today, and we're basically in no man's land. A bit more interesting on the ES, because on the ES, there is the DP off, which I had on my own analysis, off that previous high, which the market came into yesterday. We've now started to come back off that. So we'll wait and see whether there are any sales setups if the market continues to decline off this 15-minute resistance. So that came into the high perfectly as of yesterday's high. So the market yesterday rallied all the way up right into the 15-minute DP level. Where would be the ideal place for this to go down to? Well, it would be lovely if it went down to that DP there, which it did. It's gone down to there. So we could be very well anticipating a minor rally up here, and then it'd be to see whether it rolls over and carries on down. So yes, Chris, there is something very interesting happening on the ES at the moment. As Azir said, last Friday he took a very nice US dollar Swiss franc. So that was a US dollar Swiss franc. Have I got that there? US dollar Swiss franc short. So I don't know what time frame you did that on, but that would have been very nice if it got a nice decline there. So very well done, Mazir. Looks like you're trading very nicely and confidently there at the moment with MTPredictor. So well done. Yep, got the nice short off that level, Mazir. So he managed to catch that trade set up there. So very well done, Mazir. You've got some very nice trades there. Again, let's go out to the 240 very quickly and see whether it came in there. Smack bang at 240 minute resistance on the 1 hourly chart, right up there for a DP sell, down into the target, 2.4 hour profit. Mazir, very, very well done. So I think that's absolutely perfect place or perfect time to actually, or perfect example to leave today's webinar with another great example there from Mazir of exactly what to do with MTPredictor. So very well done. Okay, thank you very much, everybody. Hopefully you've all enjoyed today's webinar. So what I'll do now is I'll finish now. And if there are any other questions or anything else, drop me an email, steve@mtpredictor.com. And we'll see how the markets unfold and come back and perhaps catch up on some of these examples again next week. So have a good trading week, everybody, and work on that psychology. That's the hardest thing to work at it. We all have to keep working at it again and again and again and again and again. It's sometimes you feel like you're banging your banging your head against a brick wall, not a brick against a head wall, banging your head against a brick wall sometimes. But you know that is the hardest part of trading, and that's what we have to all work on and continually work on. So thank you very much, everyone. Have a good trading week, and we'll be back again to do it all next week.